The broadcast is now starting. All attendees are in listen-only mode.
Hey, welcome, folks. Oh, go ahead, Dan.
Oh, Brad, were you going to introduce
I
us?
was going to introduce you as the illustrious presenter here today.
Hold on. You and I are going to go to the magic time machine. Okay.
Hi, everybody. Welcome. Welcome. Today is our Wednesday QA webinar. My name's Brad Williams. We are here with our CEO, Dan Merkin. We're going to talk to you today about trade ideas, what makes it great, how to use it and make money in the market. We're going to show you some of the things that we've been working on. This is kind of always the forum that we use to show you some of our new ideas before they actually hit the market. And, you know, this is your webinar, so we're going to take questions from you guys and we're going to solicit ideas and things to talk about right from you. So, hey, Dan, how are you, bud?
Brad, thank you for the introduction. I really enjoyed taking our little time machine back to the beginning of the presentation. I'm your humble CEO, but really my executive position is not the important thing. Brad and I, we are creative partners pushing the technology forward, and you, ladies and gentlemen, are here today to see some of the most profound leaps forward. Brad, that's the only thing I can kind of say.
Well, I can't argue with that, right? I mean, we've been doing this for about 14 years and the stuff just gets more and more intense.
Right. So, Brad, let me ask you a question since, you know, out of the two of us, I am, let's say, the more floaty and you're the more centered. Are we doing polls today or are we just jumping right in?
I think we should jump right in. You know, traditionally and typically we do this poll that asks everybody, you know, are you a member of Trade Ideas or not? And it usually comes back 50-50 and we end up, you know, having half of our audience be members of Trade Ideas and half not, and just looking at what we do. So we'll just keep it at that type of, you know, percentage and go from there, I think.
Got it. Okay. Okay, so let's start then. We always begin with a disclaimer. Trade Ideas is not a registered investment advisor. All the information that you're going to hear from myself, from Brad Williams, or anybody associated with Trade Ideas should not be construed as a solicitation to buy or sell securities. If you're interested in specific advice on buying or selling securities tailored to you, you should consult a registered investment advisor. Brad, are you okay now? Have you been disclaimed?
We've done the proper disclaimer. Let's go ahead and rock and roll.
Okay, so something to make sure everyone here is aware, we are doing an event that's starting Saturday, but really the public part of it is Sunday. We're going to have speakers that showcase what we believe is kind of like the realistic part of investing and research and things that are just tangible things that people who are interested in managing their own money must know. So this is a link where you can go to register for the live stream. There's like over 1,000 people that are registered to check this out. So it's going to be really cool. It's all going to be taped. And this is kind of like our second annual event. We did one last year that it was tailored more specifically geared towards women investors who we believe are kind of still grossly underrepresented in the stock market. But hopefully some of these steps that we take, Brad, will go to change all of that.
Agreed. It's also a good time to come meet us, right? And say hello.
Well, that's absolutely. You're going to get to meet the team. If you're from the San Diego, Orange County, even LA area, certainly also Tijuana, please come and check it out. We love to see our customers and fans and things like that. And since we don't always get a chance to do it, this is a great opportunity for you to meet the people involved on a personal basis. I used this slide before, and it's kind of a good way to begin because to progress, you have to shed some of the beliefs that you have about the financial markets. Things are not as they seem, okay? Most people in the US, oddly enough, approach the stock market in a very socialist sort of way. You make money and then you give your money to somebody else who's smarter than you to manage it. We're all guilty of it. I mean, I'm not saying that you should manage every single dollar that you possess that is to be managed. But what I will say is simply, most people do none of it. And we are here to change that. And we're here to demonstrate that there's a thriving community of people that actively manage their own money. And when you realize what happens when you manage your own money, you instantly, your eyes open, Brad, to the, and you realized this when you and I met in 1998, which is that if you ever hope to acquire some kind of a gain that's above the average, you must separate yourself from the averages. If you are in index-tailored funds, well, then you are investing in Western civilization, when while for the most part that is a good bet right now, in 4 billion years, we all know that's not going to end well, right, Brad?
Yeah, and that's true.
So you have to time it. There's a limit on that bet, but just be aware that in 2000, the NASDAQ was in the midst of a technological transformative revolution. The dot-com era had arrived. We had moved from just using the phone and yellow pages to using websites. The NASDAQ broke out, made a high, and then afterwards did not subsequently break that high again for 17 years, 2017, the year it is right now, being the year that it happened, and it happened just recently, Brad.
Yeah, it sure did.
So that's the problem, right? So that's one of the big problems that, with the notion of index investing or just buying and holding, which is that as information is digested, the more that we as a society become technologically savvy, the faster information gets processed. You realize, like, a company launches a product, you can very quickly right away see, is that product going to be received well by the market or not?
Well, it's faster and there's more information out there.
Both.
Yeah.
Both. But to get the benefit of what we are going to be showing you, you have to understand that you have to move past the notion that you cannot beat the returns. People beat the returns. In fact, only individual investors can beat the returns, because you cannot, again, do above average if you're in average territory. You cannot go anywhere on a bus where everyone else isn't going. And when you're index investing and when you're mutual fund investing, you are on a bus, a very socialist.
Well, you're on a bus with a lot of other people.
With a lot of other people. That's right. Everyone's on the same bus. One of the reasons why, and you guys is everyone here aware what is the FANG trade? Do you guys know that? Again, today's Q&A is going to be a lot more interactive, so get your typewriting fingers ready, kids. The FANG trade. Do you guys know what that is? Brad, everyone's typing with invisible ink.
They're thinking.
Do you guys know what it is, the FANG trade? Yes. John, thank you. Thank you. Thank you, guys. Thank you. Today will be a audience participation kind of a show. Our magicians, Dan and Brad, will require lots of sidekicks. It's going to be fun. Facebook, Apple, Netflix, Google, 100%. So the problem with the FANG trade is that everyone's in it. All the smart money, all the dumb money, all the other kind of money. So what happens when something changes? Like, for example, I personally, and again, this is just a comment, but in my mind, the whole Facebook thing got changed during this election cycle from a place where I used to kind of spend more time to a place where I really don't do that much anymore, just because it got so kind of nasty, and I know I'm certainly probably not the only one that perceives it that way. And when the tidal wave of that kind of a meteor starts reverberating, what you're going to see is some breaks, and you kind of saw them already. Like Facebook, had come down, and if it breaks, and if the FANG trade starts to break, you're going to see lots and lots and lots of volatility. Because again, everybody is in these stocks. But this is not where the money is made. Remember, if you're, just think of it very simply. If you are on a boat and there's only 1, 2, 3, 4 seats, you know, how many people can it really seat? Even if, you know, one seat is really 10 people or 100 or even 1,000,000. When you think about how much money is out there, 1, 2, 3, 4 names is kind of too few. And so that's the other notion of when you invest in a way where you're not flexible, and when you invest in a way where you're really just following a very large crowd, you miss or simply don't have access to the opportunities that present themselves.
Remind me to show you how to turn that off after the webinar.
Yes, Brad, please, please, us. So what I'm going to do today is I want to jump a little bit more right into the software. And what I want to talk about is the things that we are bringing to market. Brad and I are going to show you a ton of stuff, but I'm going to walk you through how we approach speculation in the markets and why we do it differently from everybody else. We do, okay, Brad, hold on a second. It is killing me. How do I stop that?
I'll tell him.
Yeah, well, tell him to stop talking.
Go on to do not disturb with your Skype and you won't receive that.
Yeah, okay. Hold on a second. Sorry, everyone. It's still doing it.
Yeah, you click on that green checkbox at your picture up in the top left of your Skype window and it gives you a status. So like do not.
Oh, got it.
Your Skype lesson for the day.
Right, okay. Sorry about that. Sorry, everyone. I think I now got it. Now I'll just probably be able to hear the noise. Anyway, so the point I'm saying is we at Trade Ideas approach speculation a little bit differently than other people. We know that the process of finding very good trades will require errors and risk management. And that's something that we continue to show to our subscribers. What we really kind of distill it down to is that we're going to put you in positions to have the best information possible to speculate. But even with the best information possible, understand that the future cannot be predicted. You can have some prevailing winds and intuition, and again, you can be riding a trend, and trends can be ridden for a very long time. But just be aware that the critical part is that ability to understand that you have an exit plan. That was, Brad, one of the biggest problems with the initial .com self-directed investment kind of bubble, where you had all these people open up accounts at TD Ameritrade and E-Trade and other brokerages, and were just buying stuff, and because everything was going up, they felt they were doing so good. You know, they're like, I know what I'm doing, but none of them ever really had an understanding of what to do when something goes wrong, which is what we at Trade Ideas want to make sure that everyone understands. Is when we bring you ideas, we don't bring you just an idea, but we bring you a whole game plan. So what Brad and I are showing you here is one of our channels, and as you can see, we have a channel bar. This channel bar is kind of like designed to be a little bit Netflixy, whereas there's different themes, you know, and you can channel surf. And of course, as you learn how to work with our software, you know that you can take elements from any channel and make them your own. You can copy them, you can save them, you can do all sorts of things. I mean, we're showing you fully functional layouts, and yet every one of our clients understands that this platform is completely customizable. You know, you can move things around, drag them, change them, you know, resize them, tons of flexibility. But the bottom line, of course, is we've got to get you to that aha moment. How do we do that? Well, as you know, Trade Ideas is the only product in the world where we have an artificial intelligence system that uses statistical analysis, much like the card counters in the MIT did in the blackjack tournaments or blackjack games in Vegas. So how do you do that in the stock market? So Brad and I are going to show you. In the stock market, what you have to do is you have to create hypotheticals. Okay, so let me show you what that means. And this is the kind of stuff where, Brad, I mean, the reason I'm kind of going back to the basics is people really want to know, I think, or at least if they can get the foundation, then everything else starts to make sense. So here, I have this stock window. This is an alert window. We kind of started from all of this. So the first thing you could ever do in Trade Ideas is have these windows, alert windows, and they stream information in real time as it happens.
Yeah, and initially, you know, back in the day, we made everybody really learn how to configure this window first before they could use it. And then we brought this channel bar in, and it really did give everybody not only the ability to instantly get going here with different themes in the market, but like Dan was saying, a great educational tool to see how we built a lot of these different models in these windows. So,
but why do I say, Brad, it's important to understand that we are asking hypotheticals. How do you make MIT card counting blackjack happen in the stock market? Because blackjack, you know, it's statistical. You know what the odds are, right? Stock market's a little bit different. You have to create some blackjack rules to trade, to track. So that's what we do. So we say something like this. We ask hypotheticals like FIBK. Anytime, let's say it's breaking out on volume, and in this case, this is just a new high. Again, this window is basically configured for new highs on volume. All of it will look, in theory, good on a chart when you see it. So that's one of the things, you know, that's, again, all of that totally automated. So notice everything looks good, right? What we realized is that just because it looks good to us doesn't mean that mathematically it's relevant. That's the real key. So we were started to ask questions, and then we asked them through a mechanism called the back tester, where we say, okay, so the market opens at 6:30. 5 minutes after the open, I'm going to pretend like every time I see something in this window, I'm going to buy it, and I'm going to exit. Let's just say hypothetically, you're just a regular swing trader, which means that you're going to get out, let's say, at the market open, but 5 days from now. And again, you're hypothesizing that the reason you're getting in, because this thing's moving on volume. Look at this. That's a pretty looking, good looking chart. And so you ask this question.
Hey, that looks pretty good.
Don't get me started, Brad.
Well, you know, it's incredibly hard to build a successful strategy. We realize that after given access to all this data.
But what you guys are getting to see here is, what does it mean to card counts, to card count in the stock market? Well, we ask these hypothetical trades and we look at the statistics. And then we ask them again. And we change assumptions. And we look at all these variables. And by we say not me and Brad, but we ask the computer to do this. So the computer is constantly looking for which way should I go? Why is something working and something else not working?
So you could be changing parameters here with respect to how long you're holding it. You could be changing filters and, you know, different components of the strategy.
Absolutely. Well, this is what we're trying to really say, is that this is, in our opinion, and this is the opinion of the fastest growing subscription service in the US in fintech, but this is the only way anyone should be speculating. You should be asking this question. By the way, we can go to an earnings date and say, hey, if a stock had earnings yesterday, is up, let's say, over 1% today, well, is it going to be higher 10 days from now? These are the kind of questions that we can ask our software that nobody else is able to ask, because everybody approaches trading in a different way. The TradeStation methodology of, the single stock and figuring out which indicator works. We realized by applying hardcore science that indicators are really just kind of another element to consider, but never predictive. None of, like, you can't use an MACD, you can't use an RSI, you can't use any of these things consistently in any way that work. The only option is to possibly have them as an ingredient. That's what we learned from our technology. But also consider what just happened. I went in, did a test, and I went through 1,400 paper trades. You can also, of course, check some assumptions, right? Like, what's my starting equity? Well, you can't trade this on 40,000.
Not at 500, right?
Right, maybe you need 2 million.
Or maybe you want to trade $5,000 lots as opposed to shares. All that is something you can hypothesize here.
Totally. And that's where you maybe have a normal account again. Not needed.
Well, remember the concept of what you're doing. You're holding this for multiple days, right? So
of course. That
obviously is going to take a lot.
Notice how, though, when we are doing speculation, ladies and gentlemen, we are approaching it from the point of view that this is your life. You have a starting equity. You're trading a certain way. You got a certain type of commission. Here, we're losing 2 cents in and 2 cents out, because guess what? That happens a lot. And of course, you would never trade 1,456 trades, but just to get an idea of what you could possibly expect, we have to run through these numbers, and that's what's happening right now as we speak, okay? As we are all sitting here in the Trade Ideas Q&A webinar, where we're showcasing you that we have added our history to the stocks. And by the way, as you can see, the AI makes mistakes. So if even the best player in the world, and this, Brad, when I was looking at this data yesterday, do you know what it made me think of? I know you're not going to guess it, but I'm bringing it up because you and I have talked about this before. I like to sip a fine wine and watch a little 4K YouTube kind of nature programming, and some of what I like to watch is like the big cat hunting. And what you realize is if you're watching things like the leopard, which we kind of talk about in terms of our approach to quantitative combine and how we look at each trade, is that you have this leopard who's sitting in a branch, and he's hoping to pounce on something, okay? But it doesn't always work out. So even for an amazing predator like a leopard that has all of these tools like the claws and the dexterity and the and the muscles and the agility, all these things, right? It doesn't always work out, and this is just like that. And that's why we are kind of proud, Brad, to show people that, by the way, the AI totally wins overall, but we don't hide our losses. That's what I'm really trying to say, because you're going to see that there's lots of other things. And also, you are able to quickly understand something that we have been communicating from day one, but really, Brad, I have to say that up until recently, it seems like it would be hard to really fully digest, which is that the artificial intelligence, when it puts out any trades, and we haven't even looked at it today, but this is really what we are about. We're about changing how you approach investing. We're saying we have the better, smarter way. Every trade that the AI gets into, including the one that we did here, it's assuming a long-term breakout. Here it was looking for a long-term change to become a bullish trend because of what had happened here. The future is unpredictable. It didn't work out, which is why, again, you have to have the exits.
Well, every idea comes with that risk management stop, and it's so important to adhere to something like that.
100%. And we'll talk about that, but I just want everyone to see that what we have added, and Brad, correct me if I'm wrong, is the beta version now out with these? I think the beta on the website does have the historical.
I'm not sure. Here's what I'm gonna do though. I'm gonna go ahead and post the latest beta that we have, not the one that you're using here, but the latest one that we have in the chat here, so that people can grab it. I have a feeling that we're gonna be rolling it after our development meeting tomorrow, so I'll do something right now.
Okay, very good. So, ladies and gentlemen, what we're trying to tell you is we believe the best indicator is actually looking at past AI signals. AI, by the way, has not traded all the stops. Some of them, it's still just looking for opportunities, just like you and I. But when it does trade, you get to see, number one, did it catch it? Did it not catch it? If it didn't catch it, then maybe you should have a little caution. Like next time I see a buy signal on this, even though, again, I'm going to interpret it for what the situation is currently, but I'm going to say, hey, it tried it here, but it didn't get it, right? Versus if I had been seeing more buy orders on V-Cell, I would clearly know that this thing has caught the V-Cell rhythm. So do you see what I'm saying? Our technology is always looking like as if it is a human speculator. It's trying to catch the rhythm of stocks and trying to invest like a human would. Every trade is a potential swing trade or a long-term trade, but if not, it's got an exit plan for you, okay? Brad, let me talk to you about what that means, and let's make sure everybody understands that. And also, are there any questions? Because we're going to be going right deep into the matrix here.
Yeah, I believe we are caught up in the question area.
Okay, fantastic. So how does our software distinguish itself from every other software on the planet? Again, the answer is kind of simple, subtle, powerful, and hopefully, as you see as me demonstrated, a must-have. And for that, I'm going to go back to our friends, the FANG stocks. Okay, so our software tracks every single stock, and although the AI does not trade everything and it tracks everything. And so what the AI does is it gives you a hypothetical of if you were to buy Facebook at this price, it suggests a smart stop would be right here. So visually, you always are going to have the levels you need to see to quickly make the smart speculative decision. Let me make a reference. You're sitting at the blackjack table, and the dealer has 15, and you have 15. Or the dealer's showing 5, and you have 15. What do? Okay? You might know, you might not know, but guess what? You can ask the dealer, Brad, and the dealer will tell you because the dealer wants to tell you. I think he's obligated.
I think the dealer can tell you the rules for sure, the statistical rules.
Right, the statistical rules. So what we've created is like as if there was a dealer, just because, by the way, even though statistics are the statistics, it does not mean that they will happen exactly, right? It just means that the prevailing odds. So here's what's happening is if you want to get into Facebook, right, you should give it at least to here to not be flung like into the wind of volatility. Okay, let's look at Netflix. Get into Netflix right here. Don't let it go past here. Okay, very tight. It's a very volatile stock, but at least give it some room. Apple. Let me zoom. Okay. You get in at 154.14. Here is your auto-generated smart stop. Notice it kind of knows like 2, because again, these numbers are not created willy-nilly. They're created algorithmically by the Trade Ideas computer. And this is for every stock, AMD. Doesn't matter what number it is. You get in at 280, get out at 1255. That's like the smart stop. That means that it seems like whatever has prevailed here has gone awry. Smart Stop Joe is computed automatically for every stock based on each stock's volatility.
We do, however, have a cap on it right now, right? I think it's 75 cents, and that is something that's going to be adjusted further.
Right, and that's simply to help people also. I mean, you have to understand. I mean, imagine if you were trading Priceline, okay? I mean, think about what kind of a smart stop you would have to give a stock that's, you know, $1,800 or $2,000. So in this case, we just created a broad general rule about the 75 cents, because if you're down more than that, I mean, again, it's kind of going against you. You should take action. That's both the smart stop technologically and the human sprinkle to it. But what we're saying at the bottom line level is for any stock, you have a roadmap, okay, that's automatically created for you. There is no other vendor that can do this, because no other vendor has the kind of data we have and we remember, we build our own charts. We don't use any third-party libraries. You know, people say, "Oh, is this TradingView?" It's not TradingView. We have some of the some more look and feel stuff, but everything here is customized to us. That's why you have the sunrise, the sunset, the open and the close, the pre-market, the post-market. Brad, which one is the sunset? It's the orange, right? Or is that the pre? Which one is dawn and which one is dusk?
The morning is orange and the afternoon is
Yeah, morning is orange, that's right. And evening is purple, like a beautiful purple night.
oh, purple sunset.
But the most important thing is, no matter where you are, whether you're in TiVo, get out right here, or you know, SINO, get out right here, or something totally different like BGNE, you have these custom smart roadmap signals for you. That's why you should only be speculating from this vantage point, no matter where you are. Okay, so that's, I mean, what we are trying to showcase in this Q&A is that we have taken our technology, the AI, put it into all aspects of our software. We're basically trying to say, look, we want you to be able to trade like the AI, and when you see the AI do well in something, you should look at it and have more confidence. It's that simple. This is the one and only mother effing true indicator, okay? When the AI is right, the AI is likely to be more right, because it was reading this for a buy signal. And the buy signal turned out to be right. And by the way, again, think of the longer term. So you can create exits and re-entry. So with, let's say, Trade Ideas, you get in here, you wrote it up a little bit, it went down, you almost got out, then you wrote it up again, you're feeling pretty good, but then it went all the way down here and you got out, stopped out. By the way, Brad, how many times does that happen to people?
That's a regular occurrence, and there's no shame in getting back in a position.
Right. So what we're going to be talking about is the systematic approach. So here I am at Holly's buy signal. I got stopped out, and I want to be re-alerted to the Holly buy signal. Again, this is where you realize that you don't need to ever panic. So look at the lesson. So you got stopped out here. You went in here, got stopped out here for a loss. Gaps up. You are so pissed. Brad, you know how pissed you are. You're mad because you missed it, you think.
Well, you're right. Yes, you could get angry.
But then I talk to you, calm you down a little bit.
Brad, why don't you set a price alert?
Well, I say, Brad, the prudent thing to do is the AI told us when we tried it, we used the systems approach, which means that we had set a predefined stop loss level right around below of this area, which is what you would do, right? Which was hit here, and then we got effed by it. That happens all the time, by the way. This is some real stuff, people. Real stuff. But the next day, when it gapped up, there was volatility, and the next day there was an opportunity to get back in. And here, you get back in with the same rules, not over here, but back to where you were at this level. Okay? You don't need to go to the extremes, but the point is, look, when you commit back to that price level, look at the opportunity that unfolds. This is the systems approach, is that you retry until you get it. It's that simple. If you commit to this particular type of trade. 1 trade, 2 trade, 3 trade. Okay, you're in, you lost money, you're out, you're mad, you get back in either here or here, even here. Because look, you're still above this level. That's the rule. And here you go, blue skies. And this is the kind of stuff that we look for. So one of the things that we showcase on these webinars is really the fact that most people don't really get to see what outsized returns look like. And so I'm going to show a couple of those examples. WTI, crude petroleum natural gas extraction. Listen, the best returns are not always going to be in the popular things that everybody is in. Look at this move from 2 to 345. I mean, that is solid. And by the way, only 1 day of correction. Okay. Look at this right here. And this was all over every trading kind of chat room and everything else. I mean, this is an example of just you are swimming in very, very large waves. You have a stock that in August was trading for $8 and went from 17 to 75 in 1 month. That is an insane amount of speculative hubris. And of course, something like this happens. But notice, once again, who was there? The AI. This is what we look for.
So we are now footprints that are there before the actual move takes place a good number of times.
Right. Here's another example, a little bit more information. So look, sell signal. So the AI also goes short, by the way. Sell signal did not work out in the short term. Buy signal only had a day. But ultimately, that sell, which was the big one that she was hunting, proved to be pretty good. I mean, this buy arguably was perfection. Sell signal did not work. So when I see this, I see that number one, there's something about this stock that is making it pop into the AI's sphere. You know, and Brad, you know, you got to wonder, what is that? Because, and I'm not saying like good or bad, I'm just saying that it smells a speculative opportunity, because look how many times it's come up on the radar. That's something that we look for. versus like VERI, which it was nailed perfectly, but it didn't continue, you know, up into the stratosphere because I think the danger zone with here was just so gigantic, you know. But Brad, which was the stock that I was in just before? The oh, this one. So what I'm saying is that now we have this information that this stock is interesting, which we like, but the AI has gotten mixed signals. So what I would say is that here, Brad, wouldn't like something like a simple as interesting, caution applies.
Oh, no question. Yeah.
I mean, this is where you, again, now this thing tells you, hey, risk really, you really got to pay attention because there's a lot of volatility and sensitivity. So now, again, this is the way that you can view our information. So instead of having, you know, indicators overlaid over stuff, what we're doing is we're layering in. Number one, we're searching for more of these and we're bringing them to you. You know, we're not, the AI does not trade everything, but it's learning. And so when it sees things like this, it will be more likely to find it in the future at $2.84. That's still a pretty good deal. And consider, look at the moves, look at the percentages, look at the volume, the relative volume. This is what you have to kind of see for yourself, is that this explorer, this our Trade Ideas market crawler is exposing you to the candidates where you are the most likely to seize on a possible outsized return probability. Because we're looking for big reversals. They happen all the time. We are looking to find them. Okay, and finally, the artificial intelligence, Holy Grail. Okay, this is during the day. From the beginning, Holly starts putting on trades. Okay, and we can't and don't control how many trades she puts on. And Brad, you will cry if I count one by one, right? So I'm not going to do that. So what I'm doing is I'm kind of modifying this view so you can sort of see the information a little bit better. We don't need the S&P and stuff like that. And this window, notice once again that we innovate in what I believe is a slightly different way, in that we focus on your efficiency of data consumption. So here what you're doing is you are being surfed through the AI trades, the top 3 in various sort orders. So here by time. So in other words, the first trade that the AI got into, and when I click on it, notice that it pauses. Okay, so I'm just going to say, so here's what I saw. And by the way, I was in this one in the morning. So I looked at this signal. Brad, what did I see before?
You saw a previous AI signal,
which was a buy signal.
It was a buy consolidation and worked out pretty well.
Right. So the signal was here. There was a little bit of consolidation, but look what it was hunting for. I mean, you can see, like, obviously what the AI was looking, amazing. So what I'm going to say is that, wow, now I can kind of see the volatility. I understand where I need to be if I'm going to trade it longer term. But this looked like, and still looks like, a move that can possibly retrace all of this. That is, again, what the AI is looking for. XL. This sunrise mover is a pattern that we often look for, which is basically a bottom fishing type of a pattern. Because bottom fishing patterns, when they work, are insane. First of all, look at the volatility. I mean, the reason that the stock is coming up, Brad, is look at this incredible volatility happening here.
Yeah, no question. And, you know, if you were to superimpose that on the broader market, you know, looking at the spiders or the Qs at that time, look, it started to come back and it started to rip back up above it, but the market was really pulling down. And you have to take a look at, you know, a variety of different factors that exist in the market.
Sure. So here's another one that, by the way, I actually didn't get into because of this. So here's an example. Look, the AI tried to find Belleron, Actually, no, I'm sorry. I did get into it. My bad. I'm looking at my conference. I did buy it, and I'll explain why. I had a note, so I'll make sure. But what I didn't like, my first thing was like, I didn't like this, Brad, because it had failed twice. Okay.
Yeah.
That was like my first thing. I'm like, man. But then I was kind of looking on this particular chart, and I was like, we are really close to some very long-term bottoms. Okay. So I was saying to myself, okay, when I enter, you know, my risk is really just this dollar. You know, that's my exit. So that's where my personal, why I followed that particular one, and it ended up working out pretty darn decently, especially in the after hours. And that's kind of the thing too, is that the AI is hunting the longer term move, but remember, there's some unpredictability. I mean, Brad, you see that that's like the after hours gap, some more after hours action happening there.
Yep.
So again, you can kind of go through all this here. I didn't see anything, but you can understand what the AI is doing. This is called the void. Okay, so a void is where something gaps down, just creates a lot of pain for the investors, emotional pain, financial pain, psychological pain. But then when it starts to reverse, it kind of creates an accelerant. There's an accelerated component to the movement when all of a sudden all these people who are maybe selling it here, or imagine if you're like, forget it, I'm out now, and all of a sudden, you know, you sold at 19, it's at 22, and again, it creates that vortex or maybe even a vacuum that pulls through this void. That's why we call that, and that's what the AI is looking for. And again, now you can go through, you can see every single trade, and when you get it, now you have that additional perspective. DIOD. I actually wasn't at the office when this one came through, but I probably would have taken it because it was right once before, and even though this was a short, you know, I would have to say, hey, it caught it. Let's see if it works out the other way. People will realize quickly once they see this that there's incredible opportunity on the short side. Brad, why don't you give us a little rundown of this BMS beauty? Again, the things that people often just never see.
Yeah, I mean, this was a spot-on trade. It was triggered out of our downward dog strategy, and it just spotted this collapse in the stock. And, you know, it basically hit our profit target, which we had set in this particular strategy. So if it hits $1, if it makes $1, you know, a full stick move in that, it's going to get out of it. And it did that in 1 minute time, I think. I mean, it was just so ridiculously fast. And as we were watching this thing, I think the next couple minutes, it even dropped another $1 before it kind of found its range back where just about where we got out.
I mean, it went as low as, you know, down to 44.5. And this is the thing that when you work with an artificial intelligence that's like your caddy or your, you know, your strength coach, whatever you need, this is how we kind of created this AI to be used. It's like, if you learn to trust it, which is what we think you should be able to do with proper risk management, which we have built in. Because remember, when you get into an AI trade, you have a red line that tells you where the stop is, green line to take profits. And whether you're in one that works out or not, you have all the information you need to be able to navigate the trade. And we think that is the really key component to active investing. When you go through, you know, charts that you have somewhere else, I mean, notice that you're not going to have a roadmap for every single situation. Whereas with Trade Ideas, we try to give you that roadmap. We also really focus heavily on tangible things. For example, here you're in a channel called the short squeeze, and I'm gonna go back to Blue Buffalo Pet Products, a very good trade that we had featured in the beginning part of our presentation. Okay, so again, we had discussed that why do we not use traditional technical indicators that often, like MACDs, RSIs, even things like Bollinger Bands? And the reason is because what we found is through statistical analysis, they seem to be fairly arbitrary. In other words, one time something will work, but it's just as likely over numbers to not. So we started to focus on, well, what can we see that we can actually control and utilize to help us? That's why you have things like the float and the short float. So Brad, I always like to point out the tangible reality and physics nature of what I'm saying, not the complicated physics of, like, you know, 5-dimensional quantum entanglement, which Brad and I talk about often, but I'm saying just the understanding the float are how many shares are out there tradable by people. That's like what's out there. What's this company floating out there in the world of the markets? Okay, and here short float says basically 40% of this number is betting against it. Okay, so that is a gigantic, in poker, that would be a gigantic tell. Okay, why is it a tell? And why is it so critical? Well, it tells you because it's like insider information, but to the average investor. That's really, in my opinion, Brad, the short float, the position in range, is the only insider indication. So here's what you know about the short float. Since 39.41 or 40% of the people are short this stock, that means these are kind of like institutional hedge fundy kind of.
That's a big number by comparison. That's a good
big number. That means there's a lot of people who just don't believe in this company at all. But what's happened? Where is this company right now? Notice it's at the top of its yearly range. This thing has been running. So what does that mean, ladies and gentlemen? It means that all of these people that are short are gonna have to get out, and every day it goes up, they have to get out at a more and more expensive price, and they're paying interest on being able to short the stock. Margin calls happen. This is like, again, all the real life kind of stuff. Okay, but we have a whole channel that's dedicated to this, so there's no reason, because there's so many people still betting against this, there's no reason to contemplate that Buff will not continue higher. And so is the case with things like WTI. Look at this, 40%. UIS. You know, I have to tell you, at first I didn't like it, but then when I saw this trade that I actually didn't take, and having this come up again, I was like, wow, did it nail the bottom on this? And it looks like it did, because now, look, I mean, still large percentage short. So Neil, days to cover, great question. What that means is, if all of these people, let's go back to this one. So with the float of 78 million and the relative average volume per day that this thing trades, it would take a full 6.96 days at the average price of the average volume of this buff to be able to get out of all of these 40% shares short. For them to be able to buy it back would take 6 days, 6.96 days of average volume. Brad can correct me if I'm wrong,
Yeah,
but I'm pretty sure
that's the way I understand it.
Yeah. That makes sense, Neil? So guys, we're approaching the end waypoint. I'm going to kind of tease you with one final thing.
There you go. Okay.
I'm going to tease you one final thing. Again, what a great call on APOG. But that's not what I'm teasing you with. So here I am in the trades, today's trades of the AI. I right click. You do not have this. I go to history. I go to time frame. And I say today, and then I go back to the first, and I hit OK. And all of a sudden now I'm able to see historical AI trades from a month ago.
Go ahead and sort that on risk on profit percentage. Yeah.
So here you can see, so how did the AI do? What were the best trades that it did? And this was the amazing one. ALDX 1085 was the one on the last one. 710. I mean 740 on the risk off and 375 on the risk on. It was insane. That was the one I was in, by the way. PULM 32%, a 187, 247. And here's the other thing too. When it gets it, what do you see here, Brad? I mean, how would you describe this behavior?
Well, I mean, I think it's trying to hit you over the head, telling you to buy this thing.
That's right. And again, I mean, if you can imagine studying the science of active speculation and things like, again, blackjack or poker, there is the concept of pressing, and this is what that looks like. So the heart doesn't work yet, but what it is it's a soft notification. And what that means is, so you're gonna, let's say, be in some window, and you're gonna click on some stock, not that one, let's say this one, okay, and you're like, oh, Micron, interesting, I like it. So you can click on it there, our servers timestamp it and the symbol, and later you will be able to create a symbol list from it, but also have a view, a calendar view, where you can see which days, which stocks you just liked. You know, if you really liked it, you could, you know, obviously make an alert, price alert.
And we'll also have a channel for it, so you can click on the channel and you'll have all your symbols that you've liked and such.
Right, so what's happening is that our software, not only does it have an AI, but it's gonna start following you around, helping you see what you were looking at. So let me then now pop back into the presentation. And what I'm going to really start with is kind of the finish. We are a subscription-based service, Trade Ideas. We've been around since 2003, probably one of the oldest ones in the whole genre of financial. And we really are the leaders in idea generation, and partly, well, not partly, but I would say, Brad, a lot of that has to do with the fact that we built all of our own technology from scratch. We don't license anything. We don't have foreign outside development. We are all internally combustive. We also understand that no matter how good your technology is, without the human element and support and nurturing, it's still very challenging, no matter what any Ferrari driving teachers may tell you. So we have a community, an active community, a trading room that works every single day, led by Barry Anderson. And if you haven't been there, I really suggest that you try it. Here's the link, trade-ideas.com/trading room. You can create a username, and again, no cost, and you can see how people use our technology as well as best practices. We have a podcast on Fridays that's done by myself, guests, other speakers, and we just like to communicate to you guys in different ways. The podcast is a less formal way to do it, but we try to be entertaining, people versus just personas. So please download it on iTunes and take a look. As I started, we have an event. The event is October 1st, and it's a summit where we're showcasing a lot of our technology, speakers. It's the search for the holy grail in investing. If you are, again, in San Diego, Irvine, or Los Angeles, we would love for you to come by and visit us. This is the link to it, tradeIdeas.com/Holly Summit, and there's also going to be a live stream. Really good speakers, people that you've never heard of, but that's a good thing because it's new information, stuff you're really going to want to see. the price of our software. We have a monthly standard subscription for $99 and the premium, which I demonstrated today, for $188 a month. It's $1,888 for the year, which is a very nice discount, or for the standard $888. The fact that you're getting, of course, artificial intelligence for this price is really the thing you ought to consider. We have a promo code for everyone who's attending right now, Holly Trades, all caps, that gives you 15% off of any of this for the first month or the one-time year, which again is the best opportunity. For comparative purposes only and entertainment, we are right there in the Venti Cafe Latte, which is Brad's favorite drink, in terms of how much we cost versus your medical school and you got to suture. So Holly Trades, 15% off your first month and your annual subscription. We are very easy to get a hold of. Our social media, Twitter, I am Trade Ideas 1, and our corporate is at Trade Ideas. We just broke the Inc. 5000 fastest growing companies in the US, so we're pretty proud of that. And like us on Facebook, contact us, email, we have a phone number. And thank you for taking your time to listen to our presentation. Any other questions? Brad, how are we doing?
I think we're all caught up. I don't see any new questions. Great job, Dan. I think you did a great job of explaining our value prop.
Okay, awesome, guys. Thank you very much. Appreciate it. Wait.
One more question coming through in real time.
There's always one. Well, you got us. Come on. So 1888 is before the discount, and then if you put in the discount, you'll get 15% off of that, Tom.
Like a double discount.
Yep. Nabil, people are asking us for access, but we haven't given our data to anyone yet.
So guys, if we didn't get to a question or you think of it after the webinar, feel free to shoot us an email, info@trade-ideas.com. Thank you very much, everybody.
Take care. Thank you.